Hey folks, welcome back to the options challenge where I just realized I made a huge mistake over the last few weeks. Since about week 9 or week 10, I increased my shares of Alphabet, but I was still calculating my returns based on 100 shares. So this is what my progression looked like for a while. However, once I corrected for my mistake, where instead of 100 shares, I had 200 and now I have 300 shares of Alphabet, you can see the unrealized gains and loss matters a lot more, and these numbers are going to affect my progress in a much more dramatic way. So this is what the actual graph should look like. Because my put options were getting exercised, it meant that not only was I losing money because the Alphabet shares that I owned were going down in price, but also I was picking up more shares as well. So that added to the downside movement. So I apologize for the confusion and if that misled anyone, but basically I am squared up right now where I have 300 shares. As of the end of last week, Alphabet was trading at 98.68, and because my average cost is 107, I am sitting on a lot of unrealized losses here, minus 2,500 US dollars. So even though I've made a net income with my options, this is in Canadian dollars, I am still down overall $941. And because we've just finished week 12, I'm about a quarter of the way through this challenge. You can see I am nowhere near where I should be, which is this yellow dotted line here. Things were looking pretty good up to week 8, where the stock has just been trading in a predictable channel. But over the last month or so around here, where we fell out of that channel, my challenge has not been going very well. Now, that being said, I still have a lot of weeks to catch up. So let's take a look at what happened last week. I put on the trade over here on a Monday. I predicted that we were going to follow this red bear channel. So I sold a put option at the $95 level, as that would lower my ACB down from 107 to 104, which would be a nice drop to my average cost. And I also sold a couple of puts at the $91 level, as I thought that was pretty much as low as the stock would likely go by the end of the week. And for my call option, I mentioned that the stock should have some challenge going up above the top of this channel, but even if it does, it is very unlikely to get past this blue line, which is the 21-day exponential moving average. And once those trades were put in on Tuesday, Wednesday, Thursday, the stock went up and stayed pretty high. But then we had the massive dump on Friday, and the stock ended the week at 98.68, which is pretty much right above the top of this bear channel, which is exactly where I want the stock to be, right in between my call option and my higher strike put option. All my options expire out of the money, and I was able to collect $199 in premiums. So other than the adjustment with the graph, like I mentioned, last week was pretty decent. And I would like to make up some of the gains that I have lost here. But the thing is, I have to be careful about where I take my higher risk plays. For example, this week might not be good because we're getting the next CPI reading on Thursday. But let's take a look at the graph and see what we can do for this week. Here we have the daily chart for Alphabet, and we can see this red bar was Friday, and today is a Monday, and we are continuing to go down. So I'm going to try to figure out where the stock will likely be on Friday, October 14th. And that's going to be this blue dotted vertical line over here. So similar to last week, ideally what I want is for the stock to finish between my call and my put options. I'll start with the call option first because that's easier to place. If I draw a channel showing the last couple months of price movement, maybe I'll make this orange, you can see the stock price has been following this channel down fairly consistently. On September 12th, it did pop up here, but that was very short-lived. And of course, last week we had the stock going above, testing that EMA blue line, which the stock did not close any day above. And so now we're sort of in this kind of weird position where Alphabet hasn't really come back into this channel. It's kind of just between this EMA and the top of this channel here. So this is actually very difficult to predict where the stock is going to go, because had we bounced off of this and went up above the EMA, then I would be bullish. Or if today we had gone back into this channel, it would be bearish because we would most likely go back in this channel. But because right now we're sort of in this in-between place, there's basically no certainty where the stock would go. I guess you can sort of see that there is this smaller mini channel going sideways here. So this one could be in play. As you can see, the bottom of this green channel here corresponds with the top of this orange bear channel right around here. So most likely that is where we are headed in the short term as we come here, and we're either going to go through and get back into the bear channel, or we're going to bounce and go higher. So when I put in my strike for the call option, I have to figure out where is the most likely highest point that the stock will go if we get a very bullish reading from the CPI report. I can use a couple of indicators to help me out. The first one is the EMA, which right now it's sitting at about 101. The other thing that can help is obviously this green channel over here. The highest is also around 101, so there's nice confluence here. It's just another reason to add resistance at the $101 level. And then the third thing I can look at is this orange bear channel, because if I were to take this and let's say the stock bounces off the top of this channel and heads upwards, if I just stretch this orange channel out and basically double its width, you can see that once again I am right here at roughly the 101 level. Normally, when a stock breaks out of its trading range, it will double that range. And that doesn't always happen, but it's usually what happens. And this represents a doubling is because if I look at the midline here, which is this blue dotted line, that's where the top of this range was before. To show you an example of the doubling of the range, let's take a look at this larger channel here that the stock was in for a long time before. This one's a bullish channel, so I'm going to make it green. So first I'm going to stretch this channel out. So before the stock price went up and down and up and down within this green channel, but once it broke out of that, I'm going to double this channel, right? So the dotted blue line representing the middle here used to be the bottom of this green channel. And you can see that the stock went down, 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 and it basically touched the bottom of this now new green channel, which I've doubled, came up a little bit, got rejected by the EMA, came down, and basically, if I get rid of this purple line there, you can see we are about to come down and meet the bottom of this green channel once again. And more likely than not, we're going to bounce off of it, but that's very hard to say for now. If we get a really bad CPI reading, like if we get 8.4 or 8.5%, the stock market is going to dump and it's going to take Google with it. And we're likely going to test the bottom of this orange channel, which is around like the $87, $86 range. So I'm going to be pretty comfortable having a call option there at around 101. And for my put option, I think I will add one at 95 because just like last week, that will lower my average cost down by about $3, which is quite a lot. But I have to be mindful of where the lowest the stock might go to. And I think that's going to be right down at the bottom of this orange channel around the mid 80s. But I don't think I'm going to get a lot of good premiums down there, so I might move this up to like $88 or $89. And maybe I'll move my call option up a little bit to about 102. So that'll give me a nice wide range there. Most likely, I think the stock will end the week around here if we don't get a surprise with CPI. Now, I'm not very confident with my trade this week. To show you how unpredictable this week can be, let's take a look at the previous CPI release, which is on September 13th, this day right here. You can see the previous day was pretty high. I guess the market was expecting good news or something. But when CPI released the next day, this is what happened. Massive downward move. So if that were to happen again on Thursday, you can see the stock could be trading at below $90 by the end of this week. So that is definitely a possibility. And I don't want it to be caught like off guard, because if I sell a lot of put options at like $92 and by the end of the week, Alphabet's trading at $88, then I could be down thousands of dollars with my option trading in a single week. And that would be a very bad position to be in, especially when, I'm already down $900 as of right now from when I started. So if I had just held on to cash for the previous 12 weeks, I would be in a better position than now. But anyway, let's take a look at the option chain and see what we can do with the calls and puts for this week. So like I mentioned, I am going to put in one option here at the 95 strike on the put side. It looks like I can get a pretty nice premium for that, around 113. So I'm going to sell that. And I'm going to go down to the $88 level. I can make 12 cents there, which almost might not be worth it, but I'm going to sell this 89 strike here instead. And I don't want to be taking on too much risk, because I know if there is a bad CPI print, the stock could be heading down a lot. So I'm only going to sell 2 puts this week instead of 3, which I normally do. And then on the call side, I probably want to go at least one standard deviation to have a higher probability of the option expiring out of the money. You can see the delta for this is already pretty low at one standard deviation. Usually you're looking at like 30%, but this is 16% likelihood. That's basically this purple line up here would be at the top of this green channel, as well as the top of this orange channel, as well as go above the EMA, which it hasn't done in almost 2 months. So the last time was mid-August that we had seen Google above the blue line, but since then it just keeps getting rejected. Well, actually, maybe what I'll do is make it 103 just to be a little bit safer. So that's going to be right above these channels here. I'm going to sell the 103 and I'm going to change the quantity to 2. I haven't done the math in my head yet, so let's take a look at what I can make with this. Okay, $180 US roughly. I think that's pretty good. It's gone down a little bit. Let's stick with a 179. And after commission, it'll be about 175. I'll drop the price down to 177 to get it filled faster. In the meantime, I'll show you what inflation expectations are looking like this week. So here we have the major economic reports for this current week. And if I scroll down to Thursday, you can see we have CPI reports coming out. So far over the last year, this has been what we've seen. Inflation peaked in June at 9.1, and it's been slowly going down. But the problem is core CPI continues to remain strong and going higher. So that was part of the reason why we got a massive sell-off in mid-September last month, is because economists were not expecting this 6.3%, which is a jump from the previous few months. I still believe that inflation has already peaked earlier this year in the summer. The question is how quickly inflation is going to go down. Now, here are the expectations for this Thursday. Analysts are expecting 8.1% for headline inflation, so that's going to come down from 8.3 from the September report, which is, it's okay, but it's not a big drop. If it comes in at 8.1, it'll be dropping at the same rate over the last couple of months.
Order filled.
Okay, it looks like my order has been filled, but it also looks like I am down to the last 10% of my margin requirement. So if I go to my trades here, you can see my Google options have been filled. We're at $97 right now. Let's see if it goes to 95 or lower, in which case I will be the proud owner of another 100 shares of Alphabet. That will take my total to 400. If that were to happen, my average cost would drop down. And if in the following week we get a nice rally, then I will finally be in a positive territory. So I'm not able to do too much this week, but I am looking forward to finding future opportunities where I can take on more risk and bring out my high risk, high reward strategy, which is vertical spreads. I'm not confident enough this week to do that, but maybe next week we'll see. So thanks a lot for tuning in, and I'll talk to you in the next one.